Welcome. Welcome back to this channel. This is Unfiltered Forex with me, Clement. And in this episode, I'll just talk about this table, these probabilities. So you can see, and I'm sure you know how to read this table. If you haven't, if you don't know, there's a video, check it out. So here's the table of meeting probabilities. And as you can see, the market has the market is now not expecting the first cut to come in March. The first cut is now expected to come in May. This is the May meeting. Why? Probably because economic data is still coming in too strong and it's not likely to favor a cut in March. So the market has pushed that forward to May. These probabilities shifted late last week. I'm sure you might have heard of it somewhere. Yeah, but they shifted last week. The market is now expecting the first rate cut to come in May. And yeah, the rate cuts expected, there's still six, but at the time, late last week, as you can see here, this December cut wasn't exactly there. No, it was, as you can see, the percentage difference between the probability of a cut and a pause in this December meeting is very small because yeah, it's still the market is still rotating between pause and rate cut. As you can see with these other ones, there's quite a significant difference between where the majority is and the probability of a pause. As you can see here, 47-20, that's a significant difference. 48-17, big difference also. 50-14, big difference also. 50-14, big difference. And 48-51, this is a small difference, and this one is also a small difference because the probability of a rate cut in March, it shifted just recently, and the market is kind of almost 50-50 on whether the March rate cut is going to happen. Otherwise, there's that one and there's also this one. So yeah, this means that explains why the dollar index has been mostly bullish for some time, especially last week. And yeah, it's likely to continue being bullish for a while if economic data continues coming in strong. And of course, the thing that's surprising with these things is the stock market is really doing good. Let's check the charts, in fact. Yeah, this is the chart of Nasdaq, and you can see here it's made a new all-time high last week, and yeah, it's up 3% already this month, so that's quite big. And you can see especially it was coming from a significant drawdown here, and now it's up 3%. This is big news. Also, the US 30, S&P 500, they're all doing really good. Yep, you can see the US 30 refreshed, created a new all-time high last year December, and even still managed to refresh it this year. And yeah, such is the stuff that's really getting the market kind of confused because now the market is expecting rate cuts to come later than initially hoped, but the market is still doing really good, which is surprising. It's not very common, but it's not exactly rare. And yeah, it's tough times to trade, especially based on interest rate expectations. But the thing that you can relate that to for sure, of course, is the dollar index. Let's look at the chart. Let's look at the daily chart or weekly. Daily, weekly. Yeah, you can see I had a swing trade here and it didn't go so well. In fact, I didn't record this. Let me save this image. Yeah, and now I can delete it. So yeah, you can see I was initially expecting the dollar index to drop because I was expecting economic data to come in a bit softer, but no. So yeah, the dollar index continued to rally instead. And as we are now, this is the next resistance, and it's likely to pump this week when the PCE comes out. Or yeah, this is the PCE. This is a durable goods orders, and as you know, consumer demand is usually very strong, so we can expect some movements there. Otherwise, that's it for this video. I hope you found it helpful.